India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning. We're coming to you from the CNBC TV18 Motilal Oswal studios, and it's a big day. It's the big day because the bigger day is tomorrow, and then the biggest day is on Tuesday, which is next week on Tuesday. But, you know, we're getting into all of that. So this is the last session where you'll be able to sort of, if you have a view and if you're so inclined, to take a view on which way elections, etc., are really going to fall, which side of the fence they're going to fall. I'm Prashant, with me my colleaague Sonia and Nigel. Guys, good morning.
Hi, good morning. The adrenaline is going to be high, right, over the next couple of days as we get a lot of news flow. But I think give and take everything, this is a market which is set up for perhaps a move upwards. Yeah. The Nifty is down 600 points from its peak, so at least there is that little bit of leg room. Yeah,
plenty of domestic as well as global cues is what we'll get over the weekend, but it's the end of earnings season as well. And I think I've been here for 55 earnings seasons, so normally you breathe a sigh of relief. Yeah. But this time around, that's not the case because you have plenty of cues coming up. So brace up, buckle up and get ready. We're only getting started, it seems.
We have the GDP numbers later tonight. I mean, that's backward looking. But then I think the elections will overshadow everything else, global, local, everything. And I think that's what I want to begin the sort of setup this morning with. The fact that election exit polls, which are due tomorrow evening. Now, remember, there used to be a time 10 years ago, actually even maybe it's only been the last 10 years, if my memory serves me right, you used to get election exit polls after every phase. So, people exit the booth. The pollsters will ask them, which way did you vote? They'll take it down. And by the time in the evening, the polling is done for that phase, you'll get the exit poll results. But of course, now Election Commission has barred that. So you get all of it together. And that's going to that'll start to flow in from 6:30 p.m. tomorrow. I think, a lot of chatter tomorrow evening, day after tomorrow on Sunday, and then, of course, on Monday as well, which is when market will react to exit polls. And mind you, I have to say that exit polls broadly sort of get the direction right. They kind of they did underestimate the extent of the victory in 2019, 2014, but they kind of broadly get the direction right. So we'll kind of see which way they swing. And if it's really one way, you'll get a big reaction on Tuesday. So instead of on Monday, which is the first trading session after the results come through, and then, of course, the actual ones will follow on Tuesday. Now, overnight, for what it's worth, equities were weak. So U.S. equities were down about 1% on the Nasdaq. S&P was down about 0.6%. 10-year was down 7 basis points. We're back at about 7.5%. Dollar index is down about 1/3%. From 105, we're down to about 104.78. So the worry so far has been the fact that, you had basically a senior Fed official a couple of days back saying that he doesn't see the visibility for rate cuts. Market reacted hawkishly in the sense that rates market jumped and equity sold off. Now you've got data which came through last night, 2 sets of data points, which suggest that the things are starting to cool down. So the first one, of course, was the revision to first quarter GDP in the US, which showed a bigger slowdown than what people were forecasting. And by the way, in both components, one is consumption and the other is price measures as well. This slowdown was observed. And, it kind of is perhaps a sign of things to come. You also had weekly jobless claims. At an absolute level, if you look at this compared to the last many months, this is still extremely at low levels. So it's not as if it's kind of, gone through the roof. Jobless claims, that is, you want this number to be not very high, but not very low as well, because very low means tight labor market. But this also is starting to see signs of a little bit of easing, and this is important. You also had another Fed official, Fed's Bostic essentially, and he made these comments after U.S. markets closed. He said he does not see rate cut in July, but he said that, post-July will be data dependent. And in terms of further data, tonight out of the U.S., you have the PCE data, which basically will once again give a broad measure of how inflation is really progressing. That is later tonight. the PCE number. And by the way, it's something which the Fed also watches pretty closely. Oil prices have come off. They're down about 2%, so that's good news. We're at about $82 per barrel on Brent oil prices. So where does all of this leave us? On the Nifty, we yesterday flirted with the 20-day moving average. We actually hit the 20-day, and then there was a bit of a rebound, but not by very much. The adjusted close left us at about 22,488. The 20-day is just under it at 22,474. So naturally, I mean, that's the first number. It'll be nice if the market kind of respects that and we don't see a break or a break and further slide below. Hourly RSI, relative strength index, very simple, but it's useful. Hourly RSIs are now suggesting that the market is oversold in the short term. You can look at the daily swing levels, etc. as well. You're getting to a position where things are oversold. Now, a 61.8% retracement for the sort of move that we've seen is 22,313. That's the next support in case the 20-day really goes. So 22,300 is the next broad support level. Bank Nifty was the only saving grace yesterday. I mean, actually, we ended about 0.75% higher there. And we've finally retraced the 61.8% of the entire fall that we saw. On the Nifty Bank, yesterday's low, which is 48,380, should not break on the downside. And the 40-day exponential moving average is 48,139 below that. So, these are numbers. On the upside, of course, on both the Nifty and the Bank Nifty, we know the recent highs, we know the all-time highs. So that is something which I think we are pretty okay with. It's just that the market has been weak. We've kind of retraced 50% of the move that we've seen from the recent low to the new all-time high, at least on the Nifty. And we are in a bit of a tentative holding pattern kind of position. Election results will be the market is in a bit of a make or break zone. And I think we'll only get that sort of real move once the numbers are out of the way. GIFT Nifty on your screen. It should come up, give you a sense of how we're likely to start. It's up about 50 odd points or so. Sonia.
Okay, so the implied opening is suggesting a big green start, right? You get a sense from all the data around you that this market is perhaps positioned for a big move on the upside post the election verdict and once the election results are out of the way, and if it is favorable in terms of policy continuity and policy stability, something that the market wants. So putting all of that into context, today could be a really big day where market positions itself for perhaps a big move on the upside. But let's see. For now, the cues are not that good. So the global cues are, a bit under pressure. The Dow is down over 300 points overnight. The Nasdaq was down about 1%. The Nifty, remember, is down for 5 straight days now. And from the peak that we saw in the month of May, the Nifty is now down 600 points. But there is definitely a lot of buying interest, and you've seen that with the domestic institutional investors as well. DI has bought 3,400 crores in the cash markets yesterday, and there are plenty of stocks in focus. So now, of course, it's the end of results season, but we do have some stocks that we're looking at this morning, whether it is names like Muthoot Finance, where the numbers have been pretty good, AUM growth of 20%, and these gold-focused companies have been doing well. It was a strong Q4 for Bharat Dynamics as well, a strong operational performance rather. The top-line growth was in single digits, but the EBITDA growth was about 73%. But let's come back to the bigger picture, because there are a couple of things that you need to watch out for. One is the Q4 GDP data for India that comes out later today, and the second is auto sales for the month of May that gets reported tomorrow. Now, this is important because it is a barometer of sentiment and demand trends. The auto sales for a couple of pockets will look good. Two-wheelers will continue to shine. So watch out for names like Bajaj Auto, Hero MotoCorp, double-digit growth expected there. The other stock I'm looking at is Ashok Leyland, because that has been climbing quite steadily, and the sales growth is expected to pick up this time, about 12% year on year. So it may build on to its gains that it's seen in the last couple of months. So these are a couple of stocks I'm looking at. But very, very interesting times for the market, because if the verdict goes in favor of what the market wants, then we could be staring at a big upside in the market in the next couple of days. Is that what the market is positioned for? Seems to be the case, but time will tell.
Well, on a lighter note, NVIDIA overnight, a bit of a rarity, it was down closer on 4%. So maybe some of that liquidity is available today to be deployed. Because it's very, very rare that you see NVIDIA down 3 to 4%, and that's sort of a base close to around $3 trillion in terms of market cap. Well, let's stack up the big cues, though, over the weekend first. It's going to be a very, very big weekend, mind you. And in fact, we have plenty of cues that are coming in there. Later this evening, you'll have the PCE data that comes out from the United States. So that's a parameter of inflation that the Fed tracks very closely. Over the weekend, you have the OPEC meet as well. You'll get the outcome over there. So Brent crude will be important. And also you have the exit polls that come over the weekend. So it's a very, very big week in terms of cues for the markets. Now let's come to the data points. We're starting a new series. And if you look at the market-wide position, or even if you look at the Nifty positioning, in terms of open interest, it's much higher if you compare it with the previous month itself. So much higher in comparison to the start of the May series. What about the FIs? Well, they are starting this series net short. So close to around, we have aggressive net short out there in terms of the FIs. You have close to around 87% of their positions on the short side. In absolute terms, it's close to around 3 lakh contracts approximately. So that's the important number out there. But if you look at it, the last time that they were so aggressively net short, well, you had a big bounce. April 2023, November 2023, when they were close to around 89 to 90% odd. In both those two series, you had a big bounce. This time around as well, it's at around 87%. So we are bracing for a big bounce this time around as well, which is going to be very, very important. So we'll have to keep an eye at whether or not the FIs get trapped on the short side yet again. But, countering their short positions are the domestic participants. Large HNIs, retail, they are aggressively net long this time around. Just take a look at the long positions on index futures. Take a look at the long positions on stock futures. So the net positioning is much higher. You have a strong counter that's coming in there. And we have seen in the past that the domestic participants, well, they have normally got it right. So let's see whether or not this time around as well, it's the same case. Levels that we're looking at, we're close to the 20-day MA, reference points on the downside up here. And also the Nifty Bank. Yesterday, we saw a bit of a relief rally. Remember, the rollovers were on the lower side that we saw post-Wednesday's close. Those reference points as well, the Nifty Bank comes up for you on the screen, 20 as well as 50-day MA. So we're bracing ourselves for a big move. I think that negative view on the Nifty will only come up if we breach the 21,800 or the 22,000 odd mark. But otherwise, you'll have to back the bulls and say we're bracing for a bit of a pullback.
Okay, exciting times ahead for the market as the market reacts to the election verdict on the 4th of June. And, of course, reacts to the exit polls on Saturday night. So, interesting weekend up ahead as well for everyone who's tracking the markets, right? But let's do one thing. Let us take you through some opinion now. Sanjeev Prasad of Kotak Institutional Equities says that the Indian market continues to be a mix of optimism and euphoria, with parts of the market rightfully reflecting the strength of the Indian economy and its long-term growth prospects, and other parts reflecting extreme euphoria linked to baseless narratives with absolutely no linkage to fundamentals. He says Q4 FY24 results did little to change the trend in sectors or views on the market.
We have V. Lakshmanan, a Federal Bank, who weighs in. He says that Asian currencies weakened during the week due to rise in US yields above 4.6% levels and shrinking bets of a Fed rate cut in September. He says the rupee fell almost 40 paisa after making a high of 83.03 last week. The dollar index, after hitting a two-week high of 105.18, is now seeing a quick fall after GDP growth for the quarter fell. He expects the rupee volatility to continue owing to election results. Coming sessions could see the pair, that's USD INR, between 82.75 to 83.75.
Okay, and on the bonds, Lakshmanan says the government bond yields traded lower after the RBI announced a record dividend transfer of $2.1 trillion to the central government, thereby giving a positive boost to the government's fiscal position. He says buyback auctions and lower T-bill supply further supported bond prices. He adds markets now await results of the country's general elections due next week. And US yields inched higher after economic data there seems to suggest that business activity has picked up and the labour market remains tight. He says coming sessions could see the 10-year benchmark bond yield in a range of 6.95 to 7.05%.
Well, we've got a lot of stock-specific action track for you. We get that in just a bit in our special Top 10 segment. We're looking at Apollo Hospitals, Muthoot Finance, Para Dynamics, Geo Financial, Suntech Realty, and Mrs. Vectors. All of them will be reacting to positive news flow. On the flip side, Welspun Corp, Paytm, Swan Energy, Yatra Online, all of them will be reacting to negative news flow.